We have no more music. Sorry about that, guys. I was playing music, but I muted my stuff. We should be good now. There's nothing else playing. Now I'm turning red. Great. Anyway, I was saying what a crazy week it was. I said Wowzers on the write-up for today's show because the volatility, in my opinion, is off the charts. Like I was saying, I don't know if you guys could hear it, but this week I actually had more losing day trades than I did winning. And I think most people would look at that and go, that's not good. You know, you have more losing trades, you're a failure. At the end of this week, just on my day trades alone, I was up pretty good. I had a pretty good week, so I'm going to say cheers to everybody out there. Happy 26th of July. I hope you have a fantastic weekend. Sorry for that music out there. Yeah, more losing trades, but they're all small losses. Today, I was whipsawed back and forth on that S&P, trading the open, which is like bing, 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 bing. Nuts today. Anyway, let's go to our graphic here, our wonderful, peaceful graphic. I have most of the stuff look like it was headed down as it was this week, but I have a bunch of pieces to start with to discuss. Number one, let's start off with the inflation numbers that came out. To me, the inflation numbers, as I think Margaret was asking back there, is it under control? You know, are we actually seeing it kind of subside and get back to normal? Well, yeah, it would appear so. So what I want to do first is go look at this core PCE price index. Of course, you guys know there's two big measures of inflation. There's the PPI and CPI numbers, and then there is the core PCE price index numbers that came out today. Now, the expectations were we were going to see a slight increase just month over month, which went up from 0.1 to 0.2. We actually came in line with expectations on that one, which, you know, wasn't that big of a deal. The interesting part is if we go back 12, we actually dropped one of the larger bars, and what ended up happening is inflation looks like it's actually starting to drop overall. So I think we're 2.5, 2.6, somewhere in that range, looking pretty good on the inflation front. But I'm a skeptic. I don't trust it. I don't trust the numbers. You guys know I'm jaded when I see any piece of economic data that comes out. So I wanted to see kind of what these two look like side by side. Let's look at CPI versus the core PCE price index. Now, both of these are going to be the core numbers, which strip out food and energy, two of the most volatile components of these indexes. And honestly, the piece that you and I are probably spending, well, aside from housing, that's where we're spending all our money, is food and energy, driving and heating, oil, electricity, etc. So here is an interesting chart put out by the BLS. That's a Bureau of Labor Statistics. And you can see that since 2022, according to their numbers, we have seen inflation on both metrics decline, or the core PCE and the core CPI. Again, that takes out food and energy, which I find just stupid how you could ever make that calculation without that. Right, Steve says, what's left? Well, I'm glad you asked that, Steve, because I wanted to show you guys side by side what are they made up of, right? What does the core PCE number weigh compared to CPI? Well, CPI is on the left-hand side here. PCE is on the right. Remember, the PCE is the one that the Fed has said repeatedly that this is what we're focusing on. And both of these indexes are skewed wildly towards housing. Now, as we see these housing prices continue to go up, maybe they'll stabilize at some point, but it still feels like they keep on climbing and climbing, not just home prices, but the rental prices as well. You know, that's going to be a factor on this PCE index. So PCE has 22.6% is for housing, and this is where CPI is way overweighted. 42.1% of the CPI number is directed towards housing, and I think that's why we're getting a better reading from Jerome Powell by saying, I'd rather use the PCE because it doesn't put as much emphasis on housing. Now, granted, I think we would all agree, housing is probably the thing we spend the most on, whether you own a home or you're renting. Those costs are your major cost of your salary or your income. So, did I see it's somebody's birthday? I'm seeing celebration going on here. Was it someone's birthday? Did I miss something? No, I didn't see anything. No birthdays. Okay. Just celebrating. I got it. 7.62, maybe down to 6.62. Cool. Speaking of housing, we got a pre-approved for loan today. Nice. No credit score and rate was really good. Wow. No credit score. John, we got to work on that, buddy. We got to get your credit score. You probably could have gotten much lower than, you probably could have gotten 6.6 and then pay it down to 5.6. But we'll get you there. We got to get your credit going, buddy. Credit is so critical. It's not a bad thing. But yeah, congrats on that. Good to be pre-approved. Are you buying down here? Come on, John. You're moving down to Southern California. You can be right by John Wayne Airport. You know, easy to fly in and out of. Not too many Alaska flights out of there. Anyway, let's go back to this table here because I wanted to go through the other components. If you look at food and beverages, PCE is 13.9%, CPI is 14.8%, so they're fairly close there. The thing that they don't spell out, granted they take out food and energy, yet they do not tell us exactly what percentage of these indexes on this table are energy. It's probably part of this other goods and services. So PCE, I think, does weigh a little bit more energy than CPI does, but I don't know off the top of my head. I didn't have time to research that one for you. But to Les's point, like, well, what else is there? Or I think it was Les or Steve said, what else is left? Steve said, what's left? Look, you've got recreation, medical care, transportation are the other big categories. Now, if you look at PCE, which I think is very interesting, you know, PCE is much lower on the housing, but it's way more on medical care. That's one maybe this is going to be impacted more from the administration, to going after pharmaceutical drug companies, et cetera. But 22.3% for PCE towards medical care and only 8.8% on CPI. So, maybe what we're looking at is the CPI numbers for people in their 20s, 30s, and 40s. And as we get to the PCE, it's people in their 50s, 60s, and 70s because more of your expenditure is going to be on healthcare. So this is a better measure here of inflation. When you're younger, you don't worry about that type of stuff. But housing, I think when you're younger, is a bigger expense as well because you're probably renting versus when you finally buy your home. Anyway, I thought you guys might find that interesting. Margaret says the source should be the BS and not the BLS. Well, it's tough, Margaret, because how do we know if it's really that honest, if it's that truthful, if it's on point? We all have our opinions of it. I know that there's many of you who have been like, oh, well, inflation's this number, it's that number. We all have our ideas. Certainly, I feel like the prices keep on climbing, although I will say it feels like they've somewhat stabilized. I don't go to the grocery store and see anything moving up too much, except, with one big exception, that's the price of meat. And we can talk about that here in just a second, but to me, the prices of meats have just continued to surge. Like I say, I could go back and on a sale day at my local Vons or Stater Brothers, I could find ribeyes for $3.99 a pound. $3.99 a pound, I can't even find hamburger meat these days. So, a good ribeye is going to be $8.99 on a good day, typically $12 to $14.99. Meat keeps on going up. Crazy. Anyway, where do you guys look up 30-year mortgage rates? You can do it in a couple different places. I mean, just Google it, and you'll see it pops up pretty quick. So let me go 30-year mortgage rates, and you'll see them based off of different credit histories. So right now, you mentioned you got a 7.62. If you had an 800 credit score, you'd be at 7%. And that may not seem like a lot to you, John, but I'm telling you, man, 0.6% is a giant deal, especially when you're looking at, $300,000, $400,000, $500,000 loans out there. So yeah, with the best credit score right now, it's about 7%. You can also scroll down here and you'll get it from the Federal Reserve. It should be on here. There it is, Federal Reserve, and they'll kind of keep track of what the average is across the United States. This is a good one, just kind of see where you stack up. And let's zoom in here to most recent data. And we've been oscillating back and forth above right around that 7 line really since September of 2022. We got up to as high nationally on average to 7.79, and now the national average is 6.78. So that's kind of where I would look at it. But if your credit score was high, which I can get your credit score up really high real quick, John, it's easy. It's not a hard thing to do. You would have gotten yourself a lot better price on your mortgage. Got to have credit. Okay. So back to that inflation piece. You hear them all the time say core PCE and core CPI are stripping out food and energy costs. I wanted to take a second to kind of dive a little bit deeper into that because we talked about this last year. We were talking about commodity prices. Now, some of these commodities were falling rather quickly and may have had an impact on this inflation declining quicker than expected. If I was the Bureau of Labor Statistics, I may actually start to look at the CPI and core PC or PCE numbers with food because look at the prices of some of these commodities here. So let's talk real quickly about commodity prices and kind of how they've been moving. I'm going to bring up a list here of my softs on the futures market to kind of see what's been going on. Now, I mentioned, I'll start at the top here. And I don't have all of the markets. I just have a few of them. But here's live cattle. You heard my statement just a minute ago on how I'm upset that I can't find a ribeye at a good price. Well, this is why. And right now, you see what's forming is an ascending triangle. It looks like this is building pressure and looks like it's going to jump to the upside even more. This is a weekly time frame, by the way. So going back to those lows we saw from COVID on April 6th of 2020, the price of live cattle has jumped 146%. Now, granted, that's, in the grand scheme of things, that's actually not that big of a deal. 146% gain over 4 years. I mean, come on, our stock markets have done more than that. But still, this is one of those pieces that is at all-time highs and is really, in my mind, has no, does not look like it's going to be coming down anytime soon. That is your live cattle. Now, I'll keep it on the weekly here so we can kind of see the bigger trend. Lisa says, food is still expensive. I just bought 2 ears of corn and a cucumber and it was $3.50. Yeah. Yeah. You know, maybe I should do a session on how to shop for food because I am the ultimate bargain hunter. Absolutely. I have apps for it. It's an art form for me to find the best deals on groceries. I'm not buying the 2 ears of corn for $2. I'm waiting till they're on sale for 3 for $1. I'll find that. Okay, let's move on down this list. So that was live cattle. Here is lean hogs, which, you know, for the past, since April of this year, have been on a pretty nice slide. All of a sudden, the last couple weeks have been an aggressive move to the upside, but really not a overwhelming direction one way or the other, just lots of whipsaws. Let's look at cotton. Cotton. Okay, we go back to our peak from those COVID times as well, which is actually going to be 2022. Cotton, right now, over the last 116 weeks, is down 56%. So why isn't clothing dropping much quicker, right? If cotton is a major component of t-shirts and clothing, hey, we should see this having a big impact on our inflationary numbers. Cotton down 56% from that peak. Then you have coffee. Coffee, double top right now, coming back into these highs. And again, those are not all-time highs. Those are coming right back into the highs from 2022. Nice double top there, but we've seen a pretty incredible increase over the past couple of years. Going back to October of 2023, you're looking at 70% gain. So that is a negative piece for inflation. Here is a positive one. Look at soybeans. Soybeans just had their worst week in quite some time. If we go back to that same high we saw wheat declining from, soybeans are down 41%. And these are a pretty important commodity around the world. So that's one that should be positive for inflation. Here's another positive one for inflation. Going back to our peak for wheat. I don't eat Wheaties, but I certainly do eat grain products. Wheat's down 61% in that same window of time. So a lot of these commodities really taking a dive here. Sugar is not as bad, but certainly off the highs that we saw here back in late 2023. We're down 35% on sugar. And then lastly, corn. So corn from those peaks. I know some of you probably don't care about this stuff, but again, this is what has me questioning some of the numbers and the prices I see in the store, because here we have corn down 52% over the last 2 years, yet inflation apparently is not under control yet. This looks to me like prices are under control. If we zoom out here, corn seems to be coming back into relatively historical lows, at least going back into 2007. I think this is what John Rowland was talking about, if I'm not mistaken. So either John Rowland this was Don Dawson was talking about coming back down towards those lows, and here we are with corn coming right back to them. And the last one here I want to look at is energy. If we look back here over the past few years, what has energy done? Really done nothing, right? This is crude oil on a weekly time frame. Going back to those highs we saw from 2022, crude oil is down 40%. But for the past 2 years, it's just been chopping sideways, hasn't really done much at all. So, when we look at these numbers that the Fed talks about, to me, commodity prices are a big factor in that, but it's strange that we're not seeing it drop faster. What I don't know, when I don't have charts on, and I would like to see charts, is the housing prices. Not just the prices, but also the rentals. Where are those charts of rental prices? Because that clearly has to be a piece that's been swaying this one way or the other, because it's the largest component of both measures, CPI as well as PPI, producer index. So what's the price of polyester? Are you talking about my shirt here today, bud? You talking about my polyester shirt? I don't know. Maybe that's bringing it down, but cotton feels better than polyester. Cotton, get that static cling on cotton. It doesn't happen. Well, it does, but nowhere near like polyester. Okay, so that's those two pieces. I've got one more that I'm going to talk about. What did I do, John? Oh, you texted me, smart. PI, Magnum PI. His was cotton. No worry, Oliver. Yeah. Oliver, I would want to watch the opening ceremony too. I've got it on. It's recording right now because I love the opening ceremonies of the Olympics. And bravo, bring on the Olympics! I'm so excited for it. Sadly, I'll be in Ireland for a good part of the Olympics. But all right, let's talk about our last little piece here. Obviously we got two more parts I want to get to. One of them is going to be the Japanese yen. So we talked about this quite a bit. The Japanese yen had kept their rates under zero for a long time, like a very, very, very long time. Kind of freaked me out a little bit that it was there. I don't know how we didn't get hyperinflation from Japan. Whatever. Now they're raising rates. And right now it's less than 0.1, so you pretty much can call it zero. Let me bring up a chart here because next week we're going to have another announcement from the Bank of Japan. That's going to be, if my memory serves me correct, that's on Tuesday. Yes, Tuesday. There it is. So here's Tuesday's announcement, at least expectations of the announcement. And you can see that for the last 3 meetings, they've kept things right at 0.1. But look how long they kept it at negative 0.1, right? To me, this does damage over a certain course of time. Not really good. However, there's a lot of expectations that this could get bumped up. I'm hearing that some people are expecting there to be a 0.15 or 15 basis point increase in this rate, which would bring them up to 25 basis points overall. The concern would be the volatility that it impacts the Japanese yen. So let's go look at the USD JPY. And you'll notice that over the past couple of weeks, where's USD? There it is, USD JPY. You notice over the past 3 weeks, the dollar has just been tanking, which means the yen has been absolutely surging. I'll bring this down to a daily, make it look a little nicer for you guys. There you go. I mean, we've seen a pretty significant drop in that Japanese yen right there. And again, a lot of this is expectation. Dropped over 6% at one point. Now we're around 5% decline. If the central bankers over there do not do anything with rates at this meeting, this chart's going to reverse. It's going to jump to the upside. And from my understanding, from what I'm seeing, it looks like there's about a 40% chance that they're going to raise rates over there in Japan. If they don't, David Warner and his future Forex traders are probably going to have some pretty good days because I do think you're going to see this bounce back to the upside. I don't think that they're going to do anything yet. They should, but again, it's at a measured pace. Now, they did have a change of leadership over there. Some central bankers were replaced. So I might be out of my element here, but it seems to me like if they don't cut or don't raise rates in Japan, then this is going to have a big bounce to the upside as the yen will just get weaker and weaker. So just something to keep an eye on for you there. And then the last part that I want to get to, and this will be an interesting one. It is the Bitcoin conference. Some of you may not know there is a international Bitcoin conference right now, which I'm going to bring up the webpage for it. And that is in Nashville, Tennessee. Oh, yes. So let's bring up the agenda. I'm going to bring up the homepage because this is not to be a, hey, crypto. That's not what I'm interested in talking about at all. What I am interested in talking about is the amount of influential, high-profile people that are now speaking. If you went to the Bitcoin conference years ago in Florida, I've not been to one. I just think it's a circus. But if you went to the one in Florida a few years back, when Bukele said he's going to make it national currency, he did that. And that was a huge move up for Bitcoin and helping establish it as a legitimate currency on the global stage. Here is the list of upcoming conferences. And for those of you in the crypto space, you might want to pay attention to this. We have Nashville, Tennessee, which started yesterday. You have, in October, we'll be in Amsterdam. Kind of would like to go to that one myself. In December, you have Abu Dhabi. Now, this is pretty good stuff. And then next year, we're going to be in London. So really interested to see how these all pan out. But here's what I wanted to get to. Typically, what you have is a bunch of people who are influencers and trying to push the agenda of Bitcoin, talking about how great it is and encouraging you to buy it. As Bill Addis would say, and if I remember correctly, it was Bill Addis who said this, it's the greater fool theory in his mind. He believes there's no real world application for it yet. You're just looking at people who are promoting and pushing, trying to get more people to buy it, right? Incentivize. However, the number of people going to these events has been increasing and who's speaking there. So I'm clicking on the one for Nashville just because I want you to see this. You guys see who's on here? I don't know why this clown's on there, but you have Donald Trump. Kennedy. You have 2 presidential candidates not there. Where's Kamala Harris? I don't see her on this list. You've got Michael Saylor, which we know is obviously the biggest Bitcoin promoter in the world. You have Cathie Wood, who is a monumentally influential figure in the financial arena. And you have Edward Snowden, who doesn't really do much from the political perspective. However, you do have a lot of really important, prominent people. So let me go here and click on speakers just so you can see this. You've got Donald Trump, Robert Kennedy, Cathie Wood, Michael Saylor, Russell Brand. Who knows why he's there? He's a crackpot. But you also have Vivek Ramaswamy, who some people love him, some people hate him. I think he's a very sharp speaker. I think he's a very intelligent guy. Again, this is another political candidate. We scroll down here. So you're thinking just president stuff, right? Senator Marsha Blackburn, Senator Bill Hagerty. You have Cynthia Loomis. You have some really... Cantor Fitzgerald. This is a huge financial firm. Howard Lutnick. I mean, these are big names, people. And why is it important? Because it further bolsters my argument that we're starting to see the conversation of digital assets move away from people like myself, who are small investors, who see the potential and are of the belief that we need to upgrade the financial system. And now what we're getting are politicians who are going to be at this conference. Obviously, they're going to be there to promote and talk about digital assets, to get votes, let's be honest. But this is a very positive thing. For me, in the crypto world, I think this is a huge piece to have senators, presidential candidates, CEOs of major financial firms talking about digital assets and how it may grow our financial system. So this could be a great weekend. I believe it was was it Oliver? No. There was a question that came in asking, is this a buy the rumor, sell the news kind of... Oh, it's Michael G. Michael G emailed me and asked me, says, is this a buy the rumor, sell the news kind of event? I don't know. It's very difficult for me to think that this might be a buy the rumor, sell the event because we haven't really heard anything. I think people are expecting Trump and Kennedy to say big things. Kennedy's already said that if he's elected in office, he's going to have an equal amount of gold and Bitcoin as government holdings. Okay, that's fine. That would make sense. And we actually should probably have more Bitcoin than gold is holding because it's fully trackable. But I think it does, again, open the door to a bigger discussion of where do digital assets fit into your lives, our businesses that we function with, and what does that monetarily look like. So I'm extremely excited for it. Let's look at the price of Bitcoin here so we can see what that might look like. Let's go to my crypto tab. We'll scroll down here and look at B to the T to the C. So we certainly have had a pretty great couple of weeks. This isn't just announced yesterday that Trump is going to be one of the keynote speakers here, but Bitcoin's up 30%. Again, I was still of the impression that we would see some drifting down until August. Well, I might be a little bit off here, and I'm okay with that. But if we do get some positive speaking from some of these candidates about what they may do if elected, if Trump says some very positive comments towards Bitcoin, you know what's going to happen here. Bitcoin's going to surge. Right? He has an incredibly large, devout following. And if he starts talking more and more positive about Bitcoin, they're going to go out there and buy Bitcoin, period. And, we're very close to all-time highs. Our all-time high was achieved back in March of 2024, and we've kind of been floundering since then. This could be that piece that starts that catalyst run that I've been talking about. I thought it was going to start September, October was where I thought we'd start to get that big run, which takes us all the way up to 250,000 plus by next year. So keep your eye on this Bitcoin conference. I think it's very interesting. This one's in Nashville. And if, President Trump makes statements like, I will make Bitcoin legal tender, or I'm going to, fill up our treasury with Bitcoin, anything like that, Bitcoin's going to soar. You're going to see the whole digital asset space have a big pop to the upside. And, maybe that's why we've seen it just get pushed down with negative news. And I don't know. It's all speculation at this point, but when I look at the number of names on that ticket speaking at this conference, it really makes me feel more positive about the future of digital assets. I wanted Merlin on the ticket. Nah. What, you mean presidential ticket or at the Bitcoin conference? Most of those, what am I going to say about Bitcoin that hasn't already been said? It is what it is. Let's see. What do we got here? Merlin crypto trip upcoming, Amsterdam and Abu Dhabi, details to follow. Now that would be, when was that? It was October 9th. I don't know I don't know if I could do that one. I don't really have an interest in Abu Dhabi. I mean, I think it would be interesting because you're in a very unique part of the world. I have not been to Abu Dhabi. I've done Dubai, and I was going to hit up Abu Dhabi, but I did not have the time to make it over there. Maybe London in 2025, but I'm going to be pretty busy month of October, I'm pretty sure, and I won't be able to get that kind of time off. But yeah, let's see who's speaking at that one. Is there anybody on the ticket yet? Yeah, so we don't know. They're mapping it out. We haven't even heard who's speaking there yet. Interesting. Anyway, all right. Yeah, I'm a huge fan of Amsterdam. I would say if I had to live in a country, I would choose Thailand or Vietnam. If I had to live in a specific city, I would choose Amsterdam. I'm definitely a fan of Amsterdam. I got some good friends there as well. Just great people, great place. All right, what time are we at? All right, 30. So I did fairly well on my timing on that one. Now I can go back to your questions and things that you wanted to cover. Let's go and run through our top 7 here, and let's break it down by percentage gain, and I can walk here real quick through the expirations that happened for me today. As you guys know, I had some options expire worthless. CRWD, CrowdStrike, which was a really, in hindsight, was a great trade just from a rate of return perspective for just a couple of days. But my CrowdStrike options will expire worthless, or have expired worthless. Remember, I sold the 240s, and I think Steve, you did as well, but you're out another week, so you got one more week to go here. I have Tesla. The only ones I've left right now are Tesla and Schwab. Those expire on the 16th. Actually, no, Tesla is the next week, so TSLA. I got some Tesla, sold some Tesla puts at the 205 strike price. I think I'm going to be okay on that one until next Friday. But remember, we do have Microsoft, Meta, Apple, and Amazon all reporting earnings next week, guys. That is going to be a very volatile week. I think it's going to be kind of wild. And then my Schwab, SCHW, I've got a bunch of Schwab that's going to be expiring on the 16th. So I already have the vertical goalpost there. I think I'm okay for now, but we'll have to wait and see. Again, long haul, I'm okay with Charles Schwab, even though we do have a little shooting star on today's market. Thank you, Lori. Like my shirt today. I wanted something bright, cheerful, and kind of fun, you know, to match the thumbnail for today's show. Lisa, damn, I've been to London so many times, answering once, and never Abu Dhabi. Would like to go to Vietnam. You should try it out, man. You know, when you look at, we digress. It's funny how one comment, Lisa, is throwing me off. I just skipped the record. I'm going from financial markets to life and travel. But whatever, it's Friday and I got a glass of whiskey in my hand. I'm good to go. If you talk about going to London, right? So, and London's a beautiful city. Don't get me wrong. I know we've got some people here. Brian might be here hiding in the shadows, talking about, you know, London and England and how great it is. I love it over there. But the cost is expensive as heck. Expensive. So when you go to London, remember the currency rate is a big factor. A lot of people don't think about that. So right now, if you had something and you're like, oh, it's going to cost me £100 for dinner. Well, that's going to cost you $128 because the currency conversion rate. So that'll kind of mess you up. So you look at the prices in England and you're like, oh, well, they're kind of expensive just with the number. But then you do the currency conversion like, man, that's really expensive. So London as a destination is very expensive. Now, if you go to Vietnam, everything that you get there is already so much cheaper than anything you can buy in the United States. Whether you're talking clothing, accommodations, food, you name it, it's all incredibly cheap. And then you look at a currency that over the past few years has done this, all right? Let's just go, I already measured this one out, but going back to those lows of 2022, the value of their currency has dropped 13%. That's big. It was already cheap, but now you can buy 13% more. So, you know, something to keep in mind on your destination list, Lisa or anybody else. I mean, everybody here should have a destination list, right? Where would you like to go? Like, make your list. Here's where I would love to go. And then watch when your dollar buys you more in that country. So if you're thinking about going to, let's say you want to go to Italy so bad, I want to go drink wine in Tuscany and, you know, visit the castles and just have great Italian food. Excellent. I love Italy. All right, well, fine. Let's go look at that Euro USD. Right now is not a terrible time. It really hasn't gone anywhere. But ideally what you want is this to just going down and down and down and down. I mean, when I went there for Oktoberfest of last year, that was like the perfect timing. I could not believe how perfectly we timed it. We got a lot more bang for our buck. Whereas now, you know, you're paying considerably more for the same experience. Lori says, I'm going to Australia. Oh, okay. So here's your AUD USD. So for Lori, this is actually not a bad time to go because you've witnessed over the past, since 2021, the value of the Australian dollar has fallen against the US dollar 16%, almost 18%. Great. Now, hopefully, by the time you get there, it will have dropped even lower, and this keeps breaking down. That's what you want, which means every day Lori gets more bang for her buck. To me, that is just something most people don't think about. Thailand, I mentioned, one of my favorite places. Here's the US dollar against the Thai baht. Just keeps on going up in value. So the dollar's buying me more and more and more from a percentage change from these lows we saw back in 2020 to where we are today. I get 20% more. My dollar buys me 20% more. Anyway, should do a show just on that, how to travel. Speaking of clothes made in Vietnam, though, on Nikes, here's something that's interesting, guys. When you go to Vietnam or you go to Thailand, a lot of clothing is manufactured in Vietnam. When I was in Hanoi, there's these known streets where you walk down the street and there's a Nike store. It's not Nike. It's not a sponsored Nike store, but you walk in and they have every garment you can imagine from Nike, every shoe. You want your Air Force or Nike 1000s. I don't collect Nikes, but they have so many shoes, and the shoes are a third the price for the exact same shoe. I feel like when Nike goes to these factories, they say, hey, make us 5,000 pairs of the Air Force One. And they're like, okay, we'll make you 1,000, and we're going to make 3,000 over here for ourselves and sell those on the black market. You get the same shoe. No one's going to be able to tell the difference. I actually had a friend whose roommate was the marketing manager for Diesel jeans. So when I went to Vietnam the first time, I bought some Diesel jeans. They had the holograms and everything. And I came over to their house for a party, and she looks at my pants. She's like, are those Diesels? I said, yeah. And so she literally was grabbing and checking up the tag. And I said, here. And I showed her the hologram, and she goes, I haven't seen that style. Because it was slightly different style, but she couldn't tell the difference. I mean, come on. She's the marketing manager for Diesel. Anyway, love me some, like the Canal Street in New York City. I have not been to Canal Street, but I'm pretty sure it's everywhere in the world. Tickets to Melbourne cheap from of course. Jeez, I wish. Living from Indonesia, I mean, it's a really cheap ticket. Man, I love that one. I was going to get there empty. So let me parlay that away from our travel discussion, which I love and I could do all day long, particularly with with my Bib and Tucker 6 over here. Well, look, let's look at Nike. N to the K to the E. It's on my watch list. I've been thinking about acquiring some Nike and buying some. Why? Because this is the biggest shoemaker in the world. And right now, as we stand at current market values, you're looking at a decline in Nike of almost 60%. That doesn't mean it can't fall further. It doesn't mean it has problems. And I'm sure that people copying their designs and counterfeit stuff is taking its toll on it. But Nike still is that juggernaut. And I think at some point this is going to be a great buy. I wanted to sell some puts at the earnings announcement, maybe selling puts at $60. We'll see if it drifts a little bit lower here. I would like to buy it at 60 just because that's that giant turning point back here from 2020, the COVID turning point. A lot of businesses aren't anywhere near those COVID lows, and here we are having Nike right near those historic lows from the COVID drop. And I don't know whether something is fundamentally wrong as a business. I don't dig into fundamentals. That's not my thing. We can look down the bottom here and just kind of click through the last couple years of earnings. They reported 67 cents in 2023 in June. They came out 94 the next quarter, 103 the next quarter, and then we started to slide. 98 was the next quarter, 101. So they're still turning profits. They're making the same amount of money, it looks like, right around $1, yet the price is down. Let's see, at its peak back here, they were making 83 cents. So doesn't that seem strange to anybody here? At the peak, they were making, let's say, $1.16, and then it was 83 cents, 87, 90, 93, 85, 79, 66. So they're dropping 94, 103, or back above $1, 98, and then 101. So they're back above the same earnings that they were making back here when these prices were in 2021 up right around 170 bucks, and here we are at 72. So I do think that this is bound for a rebound here. I just don't know when. And again, you've got to broke below and it's still dropping below. Yeah, it's an ugly chart, and at some point, I guarantee you it's going to bounce. There's no ifs, ands, or buts about it. I just don't know when it's going to happen. But it's on my watch list. I have Nike on a watch list, as well as Boeing. I have CrowdStrike. I'm probably going to sell CrowdStrike puts again next week just to collect some more premium because it's just hot. The premium is really expensive. I meant to sell some today, but I got busy near the end of the day. So Deckers is killing it right now with those Hoka shoes. Yeah, Hoka's big time brand. Not like Vietnam. Quality and prices are amazing there. Yep. All right. What else do we have here? Wall Street wants to see those numbers go up every report. I get it, Lisa, but when I look at acquiring something that's giving me an earnings play, great. I mean, the dividend back here we saw at the peak was 30 cents. The dividend that we're seeing now is 37. So by holding the stock, not only am I getting a better dividend when it was at this peak at $170, but I'm actually getting better earnings. So I feel like I'm missing something. I'm not quite sure what that is, but if they're still making good money and their dividends going up, that definitely makes me think that Nike's going to be a buy here at some point. So there we go. What other questions you got? Thank you, MT. Hope that helped a little bit. I'm not jumping on it yet, but I am interested in it, and I could definitely see myself jumping it. Les says, you timed it perfectly when you went over, and the rates were better. Oh, that was to my European trip? Yeah. Well, I'm going to Ireland next week, so that's not going to be as good of a timing piece, but we'll see. Should be a good time anyway. Okay, let me run through your top 10. I want to start this a little bit differently because, Bob Dunn was one of my favorites, even though he's a crazy, crazy man. I do want to start by looking at the weekly time frames here. So I'll look here on the weekly perspective just of our top 7 to see if there's anything that jumps off the chart at you. So here's your weekly for crude oil. Now, crude oil really doing nothing. You notice the chart we have here? It's been staying in this compression cycle, which is lower highs and higher lows, right? Just kind of squeezing. We're coming right back down to that yellow box we talked about as a buy point. I was trying to pull some, sell some puts on USO today. I just didn't get the trigger on it. I just been just too busy with other stuff, unfortunately, so that one didn't come through, which is fine. I'll probably get that next week as it comes down to this yellow box right around 75.60. The 10-year, Big Eb's not here today, but he's gloating. Just see a nice bearish week for that 10-year. Been drifting lower, slightly lower on the week. Nothing too extreme, but we'll see what happens by the time we get to December. Your dollar index, sideways chop, no big deal. Now, here's where they start to get pretty interesting. Your last 2 weeks for the NASDAQ have been appallingly bad. I mean, these are real bad. We haven't seen, I guess you did have one big red candle back here on April 15th. Other than that, there aren't any really big red candles like we've seen these past 2 weeks. Personally, I've mentioned this before, I think you got to be really careful next week. I think people are pricing in bad comments from the remaining 4 of your Magnificent 7. Well, 4 of your remaining Magnificent 7. Tuesday, you're going to have Microsoft report after hours. Wednesday, you have Meta. And then on Thursday, you're going to have Apple and Amazon. Not so concerned about Amazon, but Microsoft and Apple I'm very concerned about, as well as Meta, because of the amount of capital they've been spending on AI. It's been very public. And I think Google set the tone of negativity this week by saying, we're not getting the rate of return yet, so calm down, it'll take time. That's true. And maybe we can buy these things at discounts as time goes on. But right now, I think this NASDAQ's probably going to come back down to this rally-based rally we saw on the NASDAQ 100, right around 18,700, right in that ballpark. I think that's where we're headed next week. So we got, looks to me, about a 500-point drop potential for that NASDAQ next week, maybe more. S&P, weekly time frame. Man, look at that beauty. Came right down to this area that was drawn out. This is the 5,438.5 target. Just to understand why that was there, let's go to your daily time frame. It actually is on the hourly time frame for me, but there's your target here today. Let's go to the hourly, 1 hour, and that is, why did I have that? I can't remember what I had exactly there. There was some time frame I had that really drew out this specifically that zone on the ES, which ended up being your bounce point today. I know it was the origin of the gap, which we hit, bounced off that thing twice. All in all, making for a great couple of days. We'll see if it kind of drops any lower than that, but we did come down that demand zone, so there we go. Rob says already bounced up from the demand zone. Yeah, it's bounced and then hit it again, and the question now is, where is this thing going to go? This is an hourly time frame, obviously, and it's tricky because you would think that this is going to bounce back to the upside and we're going to see buying come in, because that's what's happened every time this market is sold off. Every time the S&P takes a big down day, all of a sudden it has a nice rally up. So to me, next week will be the determinant on this one, based off of Microsoft, Meta, Amazon, and Apple. God, I'm just bearish. I hate to say it, I'm just bearish. I don't want to be a perma bear, but I'm definitely bearish. All right, weeklies. I want to stay with the weekly as we wrap this up here. Weekly for gold. You had that giant shooting star last week. A little bit of downside move this week, and again, we're right back in this sideways consolidation rate on gold. Love it. Russell 2000. Ripping back up towards those highs we established last week. We had this beautiful shooting star formation on the Russell last week, but we just got no follow through, right? We did not break those lows from last week, which would have put a price below 2,170. We did not get that. Now, the low for this week was much higher, 2,188. And finally, Bitcoin. This is a big time hanging man formation. We did come down to a demand zone this week and bounce back up. I'll show you that bad boy right here. All right, that was your tagged into it. When this thing was selling off, I said they're probably coming there. You could fill this gap all the way down to 57,000, but just the way it was moving, the positive energy and the absorption of all the Mt. Gox coins and the German central bank dumping of their Bitcoin, this is a really positive sign. So for Michael G, who emailed me at TraderMerlin@gmail.com, I do think that this is poised to be a bigger week next week. I just think that the euphoria that's going to happen over the weekend because of what's said at the Bitcoin conference, I think will probably cause Bitcoin to jump up on Mondays or Sunday nights open into this area of supply, if not past that at 71,000. All right, so that's your top 8. What did Naum say? I don't understand this chip buying. Won't those chips be obsolete in a year? Yes and no. So I think part of it is there's a lag time for them to create these chips, right? So NVIDIA unveiled the Rockwell chip. I think it's the name of it, the Rockwell chip at the last conference. Everybody's going to want that chip, but they're not there yet, right? They're still in production. So you got to get what's available right now, otherwise you're going to start falling behind. So yeah, they will probably buy those chips. They'll be out of date in a year or two as some new, bigger, better chip comes in, which is why NVIDIA is in prime shape, because they can still sell those A100s, the H100s, those big AI chips that are popular right now. And then once that Rockwell comes out, they'll be like, yeah, you can have those, but you want the Rockwell, you're going to have to pay even more for that bad boy. So yeah, it is kind of confusing why people are gobbling them up. But remember, if you don't jump on that bandwagon now, you're going to start to fall behind. And given the money that's at stake, I don't think any of these major tech firms can afford to fall behind in that AI race. I'm of the opinion, like I think Tom is, that some of these companies have already been in a long time. It's just the kick in the butt was ChatGPT when it rolled out in December, and all of a sudden everyone's like, hey, we got to get this. We have to do more with this. What can we do? And I personally think that they're overextending. I think that they're shelling out way more capital than they need to, because it's almost being portrayed that that AI is the answer for everything. And then all you have to do is buy these chips and your company's going to, triple X its profits. That's not the case. You have to build applications using these tools to make and streamline your operations, and I don't think that's happening yet. So it will be some time before we get to that point, but all in all, I'm excited for AI and what the future holds. What other questions do you have for me before we wrap up here? Let me, while we're wrapping up, I will go to your economic calendar for next week, just so we have that one. Not next week, just for Monday. It's a quiet day on Monday. You really have nothing for the United States. You can see here, nothing good going on. You do have GDP coming out for France, but who cares about their GDP? They got the Olympics starting. I'm not worried about their numbers. Earnings next week are a big deal, but Monday really isn't. I'm trying to remember. I got to build my Monday morning must-knows here, but I don't think Monday really had any major names. A couple, but the big stuff starts on Tuesday, as I mentioned, with Microsoft. You've got Tilray, which is, super tiny. McDonald's, Chesapeake Energy, On Semiconductor, Welltower. Those are some of your bigger names reporting on Monday, but really it'll be about Tuesday, Wednesday, and Thursday with those numbers. So you have to excuse me for my departure because I will be doing a show Monday and I'll be doing a show Tuesday. And on Wednesday, I'll be on a plane to Ireland. Gonna help myself some Jameson and some Guinness. Should be fun. Gonna love doing it. You think we are too early for AI? I don't think we're too early. I think we've overset the expectations and money is just poured in. So what I think is going to happen is very similar to what happened with the .com. And let's real quickly, it's a great question, Oliver. If anything, we need to go back and look at history when these types of events happen. So let's just go and look at NASDAQ 100, okay? And bear with me, I'll keep it on myself because it's just going to give you a headache as I scroll over here and zoom out to try to find the date when this happened or how it happened. So if you go back into the 2000s, right? And here is when the .com, and no one would have called it a bubble back then. It was just, this is the .com era. So you go back into 1999, right here. Here's where I took my first OTA class, by the way, guys. I'm going to go right here, June 1st. Of 1990, oh wow, it's actually 1998. I'm actually off this chart. June 1st of 1998 is when I took my first trading class. And then all of a sudden things just started to get better and better and better and then just started screaming to the upside here. Why? Because everyone said, oh, I have to be a .com. I need to get into .com. Whatever this .com thing is, I need it. I want it. I want to be a part of it. So companies were spending so much money on it. I'll give you an example. So the company I was headhunted for out of Italy, they were an Italian-based bank, actually a reseller of software, and they brought me on to teach trading and investing to the European Union. Their website was an absolute mess. But remember back then in 2001, web developers were not that developed. They spent millions of dollars on their website to have an extremely basic website that translated into like the European languages. So it had German, it had Italian, it had French, it had Dutch, it had English. Those were your 5 languages. Millions of dollars. Now I could go on Wix and create a page that's far better than that for probably $500, maybe a couple grand, not millions. So people were overpaying for the services that gave them that .com look and feel. And then what happened? They overspent, they couldn't monetize, they couldn't justify how much money they spent for all these web services, applications, hosting, and a lot of the businesses just didn't work because they didn't understand it, and all of a sudden, it just comes crashing back down. Now, I don't think that the AI bubble is like this. I don't think it's going to look like this .com bubble that goes down 50, what did the NASDAQ fall? NASDAQ was more than the S&P. Yeah, NASDAQ fell 83%. 83%! Look, I think that a lot of companies are overpaying. For Microsoft, Apple, Google to overpay, who cares? They have so much money, you won't even notice. Drop in the bucket. But for other companies that are trying to get up to speed with AI, they're going to be paying for these chips, for these services, which haven't been developed fully yet. And they may spend $50 million for a whole AI suite of products and services that when push comes to shove, they're going to look at it and go, shoot, this doesn't really, it does some cool things, but it hasn't changed my business fundamentally. It hasn't given me that extra juice that's going to make me beat every piece of competitor product that comes my way. Uh-oh, now I'm out this money. All of a sudden I have to fold my company because I overextended myself. I think that's what's going to happen. So the big guys you're going to be fine with. Yeah, they'll take a hit a little bit. But at some point, pretty sure that Google and Amazon and Apple and all those big multi-billion-dollar, multi-trillion-dollar tech firms will have the infrastructure in place. They'll put it to use, and they'll further extend their lead in that space. But I think it is going to have a big boom cycle, which I believe we're in. The question is now, is this where it's busting a little bit? Do we get a 20, 30% pullback in tech because of that? I would embrace it. I think you all would as well, except for those of you who are long. I know some of you are long right now, and that might not be comfort to your ears, but I would embrace a 30, 40% drop in prices so I could buy back in at lower prices. But it is what it is. I don't know. That's all speculation. It's my opinion, and as you know, my opinion doesn't mean squat. You got to put your money where you think things are going to go and base it off of your opinions and what the market is telling you. All right, let me see here. How much time we got? Okay, 10 minutes left. It's going to be a roller coaster week. Absolutely, Tofi. Next week's going to be great. Thoughts on render? Missed getting in at 590 by 4 cents. It took off without me, but I can patiently wait. Well, I mean, I guess, the thing with crypto that makes it unique is, just to me, it's very different. If you're looking at render and saying, hey, I like what render is doing, I like their products, and I'm comfortable owning them, then why not just buy it, right? 590, you're looking for a demand zone right there. I can see where you're going. I would have gone the $6 level myself just because it's a round number. But you are at a downtrend, right? We're making lower lows, lower highs. I would say that if you missed it at that, trying to buy it on the cheap, then you might want to get ready for a breakout here. If it breaks above this high at $7.22, and that might be your next buy-in, because at some point this downtrend is going to reverse. And if we get a surge in crypto, obviously render is going to follow suit. And render is like legitimately building. They have an actual product. It's being used by Apple and other companies. That it's really cool technology. So they are one of the unique ones that actually has something deliverable that puts into augmented reality, makes it a reality. So pretty cool. But I'm a big fan of render. What else do I got here? Do you think that reposting your live videos as standalone videos on your YouTube channel would improve your view count and general visibility? I'm not an expert, but I think live videos don't show up as much. Yeah, I don't know. That's a great question, MT. So part of me, what I thought about doing, and again, it's just so much work. I do these because I love it, and I don't have to do a ton of prep work. I trade. So I'm living, breathing this every single day. So for me, this is fun. But, I thought about doing a whole series of recorded videos on all the indicators. Just do a video like this, explain everything about all the different indicators, and have a series on that. And just different pieces. I don't know. I'd have to make more evergreen topics, right? This is not evergreen. You're going to look back at this show today on July 26, 2025 and go, God, that was so long ago. What that was archaic, right? So most of the stuff I don't think would be repurposed well as a standalone video that we kind of repurpose. I think it needs to be something that's evergreen, like strategies, tactics, technical analysis. Have Larry to come on and do here's how we look at a balance sheet. Boom, that's the topic. I could do stuff like that, but it's about monetization. There's so much. I already give away so much on this program for free. I think you guys all would agree to that. That going and building all those videos, I don't know. Maybe it could be something that I end up doing. Just go with the flow. It's that, yeah, that's what I've been doing, Rob. Just kind of going with it. But what I feel like I've done here with TraderMerlin is I feel like it's the field of dreams. I build it and they will come. And we all know that that's not true. What I should have done at the early onset is spend some money on marketing, got somebody as a social media person to help me out, and really done a little bit more research on what people wanted as opposed to talking about what I want. I mean, this show was not intended for what people wanted. It's just an outlet for me to talk about markets and have a community of people with like minds. I should have done it differently. I think I could easily beat 100,000 followers at this point if I did it right in 2020, but I didn't. At 100,000 followers, doing it every single day, there actually would be enough revenue. I probably would be making a couple thousand a month, which would be nice. You get me to let's say I got 1 million followers, now I'd be making, 10, 15 grand a month, then I'd probably make this my exclusive job just because. NJ says, I can assist you on your channel SEO, have the next 3 to 4 months off. Oh, thanks, NJ. Well, email me. Let's talk about that. Email me. Let me know. I'm right now at a transition, we'll say. There's a big transition coming for me, and the question is, do I take this and try to make something better out of it? There's tons of people that do what I do. I think they lack my personality, but a lot of people talk about the markets. But yeah, email me. You got it, TraderMerlin@gmail.com. Let me know what you're thinking. Do I have an index or table of contents on show topics? I don't. But really, this show is driven by what you guys talk about. So, the other day, Chio was like, hey, can you do a show on ETFs? Cool. We did a full show on ETFs. That show took me about an hour to produce outside of this. And then, 2 hours of time just to make that one video. That one's actually kind of standalone. So maybe I will take that and repost it outside of the live channel, but edit it down a little bit. So just click on YouTube. Those celebrities get paid every time. I know. I don't necessarily want to be a celebrity. I really don't care about being a celebrity. I'd rather be someone that people go, this person helped me. I got a couple emails recently from some of you viewers, and thank you very much for that. Todd and I and Larry talked about this at the event, and one of our favorite things to do and favorite experiences is when somebody turns that corner of success and they attribute part of that success to something they've learned or seen you do. And I've had a lot in my 27 years of doing this, but I don't think anybody here really understands how appreciative we are when you get things like that. When someone says, hey, your show has helped me do this, or your teaching has totally turned the corner and now I'm successful because of it. That's like the best reward we can get as instructors, as educators. You have other people who could give a shit about your success, and all they want is your money, right? They just want you to keep buying classes and buying services. If you want, you can go to Chicago and just spend a bunch of money for stuff that's not going to help you at all, stuff that's BS, but they'll just keep selling you classes and it could care less about your success. I don't know. Some people are built differently, I guess. You learn that the more and more we travel through life. Let's see. MT, I think you have some of the greatest... Oh, thanks, man. I appreciate that. Yeah. It's just visibility. I'm not a good marketer. I'm not a good promoter, but, maybe I'll put some money, a few bucks towards that and push it up. And initially, it wasn't intended to be a big thing, but now you look at how much money some of these people are making, and if I could make a comfortable living just doing this show, then I would make this my full-time job. And if I could do it even better, let's say it got to the point that there was a good amount of money coming in, then I would hire a video editor. I would hire a TJ to produce the show for me, and things would get better and better and better. But, when there's extremely low income coming in from a product or good or service, it's hard to bring on more people. But yeah, I think I've been pretty good about sticking to a 1 hour. Now it's an hour. It got me. Somebody trapped me with those questions and did it. I did not look at housing stocks. Let me do that one next week because I'm an hour show, Margaret. But yeah, I do look at housing stocks. I do at home builders and things like that. But I'll do that next week. All right, guys. So if you have any topics you want me covering next week, let me know. Monday and Tuesday will be our show. Monday's show is going to be a recession show, and I want you guys to come armed with knowledge too. Like, bring your facts, bring your figures, and things you feel are pro. We'll start off by going, here's the reasons why we're going to have a recession. We'll spend the first half doing that. The second half's going to be, here's why we're not going to have a recession. And they're all just opinions and ideas, but looking forward to having everybody share on that one. So that said, hope you guys have a fantastic weekend. Thank you for the participation, the support, as always. I hope you do something absolutely fantastic this weekend. Go United States in the Olympics, but let's just have a friendly global competition in those Olympics now. We'll see you guys on Monday. Take care, everybody.